Hey there, and welcome to Real Investment News. I'm Mike O'Neill. Yesterday we talked about the IMF's Fiscal Monitor report that showed how the global economy has been growing at a pretty steady pace. In fact, the IMF says that the GDP globally is going to be hitting 3.9% this year and again next year. But a recent report from the Brookings Institute says that global growth is one of the biggest risks for investors. Now, Lance Roberts talks about it in his latest post on realinvestmentadvice.com. The biggest problem with the growth that we have seen since the Great Recession is that a lot of it is coming from the central banks. Now, when you take a look at this chart, you can see how since late 2008, the 6 largest central banks, including the U.S. Federal Reserve, the Bank of England, and the People's Bank of China, started printing up more money to buy up financial assets, about $14 trillion worth. Now, the goals were to expand the money supply, which then allowed for the further proliferation of debt. They drove up asset prices higher, well, with the idea that the higher financial asset prices would result in economic growth. It doesn't work that way, by the way. And generate inflation to help ease the burden of the debt. But let's again go back to that IMF report, and you can see how global debt has hit $164 trillion, 225% of the global GDP. This is unsustainable. And the problem now is that since the banks see the global economy churning along, well, they're starting to remove some of their liquidity. This is showing the year-over-year change in asset holdings for central banks, and that is starting to slow things down. When you take a look, there has been a drop in the GDP for the US, the Eurozone, and Japan in the last quarter of last year. And there are other warning signs too. You've got rising delinquency rates, collapsing yield spreads, and declining wage growth for the bottom 80% of workers. Lance's warning, the games being played out by Washington to maintain the status quo is slowly creating the next crisis that won't be fixed with another monetary bailout. You can read more of his analysis and take a closer look at all of these charts at realinvestmentadvice.com. In the meantime, thank you so very much for watching. Please remember to follow us on Facebook, Twitter, YouTube. Check out our past reports at realinvestmentnews.com. I'm Mike O'Neill. We'll see you again tomorrow morning.